And in the end, what we're all waiting for is this little puppy. The banana zone. The banana zone has started. And we barely started. And you freaking out. This stupid, oh my God, it's going to correct 20%. Look at Raoul's chart of liquidity. That's this. If you can see it, in 2017. That's this in 2021. In 2013, we didn't even get that. We got sideways. So if we get a bit of a correction here, does it make any difference? Or you're better off just going outside, touching grass, spending time with your family over Christmas, drinking a little too much Bollinger Rosé, learning how to toast your own snacks. Yeah. Everything else is just fucking nuts. In the end, we're here for one thing, and one thing only. I'm trying to help you understand that you can unfuck your future with a banana. All you have to do is not fuck this up.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. Raoul Pal on the most chaotic show in macro and crypto. It's time for the last drinks with Raoul, analyzing the massive gains achieved this year with my banana zone trades such as Sui, Solana, Tesla call options, and Rocket Labs.
The Bitcoin cross has been a beautiful pattern where this is a little bit out of date, it's pulled back a tab, but it's still the same. It's like, this is a fucking wedge pattern. Now, does it break to new all-time highs? I kind of think it might do, but even if it doesn't, it's big range, big sloppy range. It means that ETH is at the low end of its range, and it'll probably get back to the high end of its range, and it remains stable in its relationship versus Bitcoin. I think that is to come, and that's driven by the business cycle driving risk-taking across assets. But when we come into that, the business cycle going up is the key trigger for altcoin season. And why is that? Again, what we need is more disposable income to invest. And what we all do is we want to go out the risk curves and make as much money as possible in the shortest period of time. That is the world we live in, because we are so fucked. We're so fucked because of how high housing prices are, the cost of goods and food, how restaurants. I was in New York City. It was $330 on my own for dinner at a fancy-ish French restaurant, not like a 3-star Michelin. It's insane out there. So we have to make a lot of money. I get it. I get that things are a lot more expensive for many of us, or for all of us. And the only way of getting ahead is speculating. I get it. So I want to help you speculate intelligently. And altcoin season is there. That doesn't mean go way out the risk curve. But here's the total market cap of crypto, excluding the top 10. So this is really alts. It does this every time. It has this consolidation wedge pattern, breakout higher. We've just started breaking out. So have patience, hold on, and it'll also get rid of many of our sins, the stupid shit you've got in your portfolio. I think it will help with that too. So that lies ahead.
After spending the past 4 years adding Bitcoin to MicroStrategy's reserves and profiting over $15 billion, Michael Saylor is calling on the United States to adopt Bitcoin as a strategic national asset. He claims this could bolster the dollar, tackle national debt, and unlock trillions in economic value. A strategic digital asset policy can empower millions of businesses, drive growth, and create trillions in value, Saylor said. His proposal includes categorizing assets like Bitcoin as digital commodities and establishing clear rights and responsibilities for issuers, exchanges, and owners. The U.S. already has a head start, holding over 207,000 Bitcoin seized in cases like the Silk Road, more Bitcoin than any other national government. While Saylor doesn't mention these holdings in his plan, he envisions a Bitcoin reserve creating $16 trillion to $81 trillion in wealth for the U.S. Treasury to help offset the national debt. He also foresees the digital asset market expanding to $280 trillion, more than 100 times its current size, but provides no specifics on how he arrived at these figures. Senator Cynthia Lummis has proposed a rough framework for a Bitcoin reserve, suggesting the U.S. Treasury purchase 200,000 Bitcoin annually for 5 years until the reserve reaches 1 million tokens, about 5% of Bitcoin's total supply. Under her plan, these purchases would be funded through profits on Federal Reserve Bank deposits and gold holdings, with the reserve maintained for a minimum of 20 years. Saylor also warned that inaction could leave the U.S. trailing nations like China. The United States has an opportunity to catalyze a 21st century capital markets renaissance, unleashing trillions of dollars in value creation, he said.
The Bitcoin, this ridiculously over-colourful chart that Julian puts together, if you've got colour blindness, this is utterly useless for you. But basically all it's saying is usually the full pattern is very strong. The only reason the full pattern was not strong in 2021, and this is really important, I'm going to say this again, 2021 is not the roadmap. What happened in 2021, because of the violence of the downside in 2020, the upside was equally violent in the business cycle. And the ISM peaked in March of 2021. Right now, we're still below 50. There is no fucking chance the business cycle peaks. And none of our indicators suggest anything that this crypto market is anywhere near overbought. This is our Z-score indicator, whatever the fuck that means. It's Julian Bittle, he's smarter than me. Well, he thinks he is, because he can use long words and things like the Z-scores, which I don't really know. But anyway, basically we're not overbought at all. We're nowhere near any of this. Our GMI cycle top indicator, again, you do get this in Real Vision Plus as part of the MIT tool occasionally, and also in Pro Macro. We're nowhere there. We're nowhere there. So we are in this perfect position where we just keep following this roadmap. This is all I need. This is all anybody needs. You don't need any of the rest of the charts. You don't even need to log on to Twitter. You don't need to do anything, but just use this. Use this one chart of Bitcoin in its log regression channel and suggest it probably goes to 2 standard deviations overbought. What is that? Well, that's kind of north of 500,000. So maybe it gets to 1 standard deviation. That's about 300,000. That looks pretty reasonable to me. That's what every fucking NASDAQ stock has done since 2012. So it's not like some special magic property of Bitcoin. No, it's Metcalfe's law. Amazon has done this. Microsoft has done this. Apple has done this. Tesla has done this. Meta has done this. It's all the same. So I'm not asking a lot here. I'm just saying it just continued to be adopted as a technology and everything continues to go. And in the end, what we're all waiting for is this little puppy. The banana zone. The banana zone has started. And we barely started. And you freaking out. This stupid, oh my God, it's going to correct 20%. Look at Raoul's chart of liquidity. That's this. If you can see it, in 2017. That's this in 2021. In 2013, we didn't even get that. We got sideways. So if we get a bit of a correction here, does it make any difference? Or you're better off just going outside, touching grass, spending time with your family over Christmas, drinking a little too much Bollinger Rosé, learning how to toast your own snacks. Yeah. Everything else is just fucking... In the end, we're here for one thing, and one thing only. I'm trying to help you understand that you can unfuck your future with a banana. All you have to do is not fuck this up.
Shifts in U.S. macro policy have served to cut short a broad risk asset rally, which observers felt was increasingly irrational. The Federal Reserve sparked the reversal by reducing its forecast pace of interest rate cuts for 2025 amid resurgent inflation markers. While it is easy to blame the sell-off on the Fed's hawkish cut, we believe the root cause of the morning's crash to be market's overly bullish positioning. Trading firm QCP Capital summarized in its latest bulletin to Telegram channel subscribers. Since the election, risk assets have enjoyed an impressive one-sided run, leaving the market extremely vulnerable to any shocks. BTC/USD traded at around $97,000 at the time of writing on December 20, per data from TradingView, flat versus the daily open. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.